think we have our next guest ready with us. Ritesh Chandra is managing partner at Avendus Capital. They're joining us right now to talk to us about late-stage investments. Avendus, of course, has been very active in that particular space. Ritesh, great to have you with us here. Good morning. Thanks very much for your time. Before I get to what you are doing and the businesses that you like, I think I have to ask you what you make of all that we've seen with Byju's over the last 24 hours or so, because that had been the poster child for some of the most marquee investors in any single company. And of course, we've seen lots of trouble over the last couple of months, culminating in what we saw yesterday evening, Ritesh. What do you make of it, and is there any broader impact on the ecosystem?
See, I think my knowledge is restricted to what I'm reading and what I'm hearing about it from the press. But I think it's clearly something which is an undesirable, leaves a bad sour taste in the mouth for our investors, especially when there is, and I don't know which side is correct in this whole situation, but it certainly leaves any kind of even smell of misgovernance. Leaves a very bad taste in the investor's mouth. And that's something that I think is best avoided in an ecosystem which is just about evolving.
Mr. Chandra, hi, good morning. So let me just sort of pull back to the larger question, because I think in your fund, which is the Avendus Future Leaders Fund, you have a mix of investments. Some are listed, some are in the non-listed space. Overall, the non-listed space, before we talk listed, I want to actually talk non-listed, the private markets as they are called. What is the mood now? It's been a very sharp cleanup phase, if I could say, in terms of, there's no free lunch anymore, if I could put it that way. So what's the mood now? How are valuations looking? How are promoters reacting or behaving?
Interesting. So I think, I always like to call it FY22 and 23 was the hangover after the party of FY21. So we were kind of in a situation wherein there was a surplus of capital in 21-22, which was kind of finding its bets in new age companies. But I think what's happened after that is there are two things that have clearly happened in the markets. One, valuations clearly, as you articulated, have mellowed down. And the other thing that's happened is that there has been a clear stratification in the market, with market leaders and top tier assets still continuing to command attractive valuations. But what has changed since 21-22 is the fact that mid-tier assets or all the also-rans are not getting financing. And that's been a significant maturing of the market, if I may put that word. And that's something that's very, very healthy for the ecosystem, because the market is clearly still reeling out top dollars for top quality assets, but is very circumspect about other businesses.
Okay, let me ask you some more, just to understand the mindset right now that you have when you go about making these decisions. I think Licious is one of the companies in your portfolio. Now, there are quite a few recent listings in the public markets which are a play in the same space. We're talking discretionary urban consumption trends, right? Now, whether it's a Nykaa, whether it's a couple of others, you haven't opted for some of the public listed stocks here. But I do see Licious on the list. So when you're looking at this part of the market, which is where a lot of the excitement and maybe over-exuberance was, whether it is your Zomato or the Swiggies and all of these stocks and these companies, what are the filters that you are putting in place now when it comes to making any fresh call on investments? Would you look at any of the listed entities now where prices have corrected significantly from IPO time?
So two things. One is we are a category 2 AIF. So consequently, our primary focus is on unlisted investments and private market investments. But just coming to your specific query on D2C brands, I think, look, we've been very selective about looking at assets. Like you mentioned, Licious was one business that we have invested. We continue to be very actively looking out for businesses wherein we believe there's a structural or competitive moat around these businesses. Valuations, again, are very subjective, right, at a point in time. But as a concept, we still continue to believe that digital to consumer offers significant value for consumers and investors. And that's something that's been a focus area for us. our analysis is always predicated on a mix of both understanding of competitive moats around the business as well as a fundamental value analysis. And I think when we look at a business, we look at it from a very long-term perspective. Even though our fund horizon may be small, but the business has to have deep competitive moats which can outlive for the next 7 to 10 years at least in the foreseeable future. And we see some of these digital D2C businesses kind of ticking the box on that one.
Okay, so that's as far as the B2C brands are concerned. Leave us with some ideas, some thoughts. What are you liking at the moment? Where do you see opportunity where valuations aren't going through the roof?
Well, India has never been a cheap market, so that's a given. But I think we are very excited about financial services at this point in time. And we are very excited about verticalized IT and digital services. And I think these are two focus areas for us as we go along. Financial services, largely because of the credit offtake demand, is very, very robust. We have the mess behind of COVID has been behind us. And we're seeing very strong fundamental growth come across in the sector in multiple pockets. And the other businesses, as I said, the other segment of which is a key focus area for us is verticalized IT and digital services. Anybody who's offering a value-added product or value-added service is of extreme interest to us because we still believe that the IT services and the digital market has very strong legs to run on at this point in time.
Okay, I think I already have a theme for our next conversation. It's going to be generative AI and whether, we need to kind of brace ourselves for some exuberance here as well. The moment these fancy new technologies come, everybody wants to put an AI at the end of their company name, right? So I think that'll be a good conversation for the next time. Thank you.
Absolutely. Look forward to it. Thank you.
Thank you very much. We'll take a quick break on that note. On the other side, Mitesh Thakkar joins in. We'll go back to the markets and look at the technical setup now.